Okay, a few seconds delay, but welcome everyone to the Anderson Report. This is Friday, August 7th. I've been away for a couple of days and I've been trying to update as much as possible on Twitter with all of the economic data we've had out, mainly on the jobs front. We're going to go over that tonight as well as the market reaction to it. So I hope everyone had a good week. If you're on the East Coast, hopefully you survived um, all the violent weather we had out there. And just bear with us for a couple of minutes. It's been a very active week, and we're going to start with a little bit of the recap, the market recap. Now, clearly, the market had been almost on a relentless rally, primarily led by the big mega cap tech names, what we call the stocks that have been fueling the internet traffic trade. That has been a good part of the rally. We have also had uh, the Dow Jones acting well the last few days, and the uh, Russell 2000 moved above what was its early June high after having trailed the advance of what we usually call the major market averages, the major capitalization weighted market averages, the S&P 500 and the Nasdaq Composite, as well as the mathematically weighted average, the Dow Jones Industrials. The Russell has been acting well, still acted well today, and it's interesting that on Thursday it was the one average that was down, and we'll get to this in a minute, because even on Thursday, when a little bit of a red flag for us, and I think that red flag is not a red flag, maybe just a yellow flag. I think that yellow flag is still up because the Russell finishing Thursday in negative territory while the other three major market averages were positive was consistent with the breadth of the market being primarily the advanced decline stats, uh, finishing Thursday in slightly negative territory, even though we had a 1% gain on the NASDAQ and gains of maybe a 0.5%, give or take, on the Dow and the S&P 500. So, but let's get to today first. Stocks were underwater most of the day. We had a highly anticipated July jobs report at 8:30 this morning, which did beat expectations. And in fact, some expectations had come down significantly for this report during just the last 2 days after the ADP report on Wednesday came in well below consensus. So the jobs number came in this morning, 8:30, at a gain of almost 1.8 million jobs, while the estimates were 1.6 to 1.8. A lot of people had said, look, it might be 500,000 or less. And some people had even been calling for, uh, you know, a couple of well publicized economists among the financial media had been calling for a halt in the jobs gain for the month of July. Clearly, we did not get that with an ad of 1.7 million jobs. Hello, Jen. Thank you so much for your support and for joining us. And John also, very loyal followers there. So markets were under, even though that report outperformed expectations. The markets have been in such a strong mode, with the Nasdaq making new highs 4 days in a row this week, coming into Friday, um, and the other averages up pretty much every day. Uh, Today we were underwater most of the day. A rally really in the last hour brought averages into slightly into the green. The Dow Jones Industrial Average going out at 27, over 27,400, a gain of 0.2%. The S&P, just a very fractional gain of 2 points, went out at 31.51. That puts the S&P within 1.5% of its prior all-time high, 33.86 from February 19. The Dow is still a little over 2,000 points away. Its prior closing high from probably that same day or maybe a few days earlier in February was 29,550 ish. The NASDAQ composite was down today. Some well deserved profit taking there. It was down a little bit less than 1%. It had been down probably 1.5% before we got the late day rally. It went out just over 1100, 11,010, but down not quite 1%. Look, Apple is 445. Before Apple's earnings last Thursday, it was trading at 385, 390. Microsoft has had a big run. Regardless of whether or not they're seriously going to, look at buying TikTok. And Facebook has had a big run also, announcing that they're going to come up with maybe a TikTok lookalike function of very short videos that people can make, probably largely to amuse themselves as much as anything. In As part of their Instagram app. Now, the Russell 2000 had just a phenomenal day. Was up 1.6%, went out at 1569. It was in the green most of the day, contra to what we saw yesterday, and bucking the trend of the other big averages. And pretty much the reverse of Thursday, when the Russell was down and the other three averages were up. So the advanced declines today were positive. By 3 stocks were up for every 2 that were down at the NYSE. So we had about 1,800 advancers and about 1,200 decliners. On NASDAQ, it was a little bit closer to even. NASDAQ, you had about 4 stocks advancing for every 3 that were declining. And that was in contrast to Thursday, where really you had about 50 more issues declining than advancing on the NYSE. And NASDAQ, you had maybe about 250 more declining than advancing. And that was with the NASDAQ rallying more than 1%. So it's a little bit of a concern that the rally's getting very narrow. The averages are being pushed higher by the stocks that are most heavily weighted in the market cap averages, the S&P 500 and NASDAQ. And in the Dow, you've got some industrials and financials playing catch up. So look, gold gave a little back. It's been on a relentless move higher. It was down about 1.5% today, 2,040. It'll be interesting to see if gold continues to pull back a bit, how it tests the 2,000 level. I don't think the move in gold is over. Silver was down a little bit too. It was down, I think, between 2 and 2.5%. It had been down twice that much earlier in the day. I don't have the exact price for it, but it's had probably a sharper move higher than gold. the thing to really focus on is gold and how it handles maybe testing the 2000 level if it pulls back early next week. Crude oil was down. Crude oil had gotten above 43 a few days ago. I believe it was on Wednesday. It was down Thursday. It was down again a little bit today. Went out at 41.50, but still, in comparison to where we were talking about crude oil just 2 weeks ago, 41.50 is a pretty attractive level right now. So I see one question right here from Pablo: is the Dow lagging because of oil? Actually, most of the week the Dow was not lagging. Now you've got Exxon and Chevron in the Dow. They reported their earnings a week ago Friday. But on Thursday, you got to bear with me just for a minute here. I believe that on Thursday, the Dow was up 300 and the Dow was up 185 points. That's 0.7%. I believe on Wednesday, the Dow was up 370 points, up 1.4% on Wednesday. On Wednesday, the S&P was up 0.6%, and NASDAQ was up 0.5%. So the Dow has gotten its year-to-date decline kind of down today at 27,400. Maybe a little bit less than 4% decline year to date. That's pretty good given that it was, 10% 6 weeks ago. But look, I think everybody really wants to talk about the jobs report or wants to hear about the jobs report. We had 3 straight days of critical data on the employment portion of the economy. We had the ADP jobs report for July on Wednesday. We had the weekly claims number on Thursday. And we had of course, the non-farm payroll / jobs report / unemployment rate from the Bureau of Labor Statistics, which is pretty much still the benchmark, even though ADP has very good data on it today. And, the market is, I think these are numbers. This is a string of numbers a lot of people were worried about. A lot of people had thought with the pullback that we had going on in the recovery stalling a little bit, that this would be a tough jobs report. So from that regard, it was a little bit better than expected. And just to hit the highlights on that, the July jobs report today from the Bureau of Labor Statistics, we added 1.78 million jobs. Now, consensus was maybe about to add 1.6, 1.8. There were some estimates above, 2.5. There were some even estimates that we were going to lose 250,000 jobs. So as we've seen the last few months, it's very, very hard to forecast. We're totally in uncharted waters with not just the coronavirus self-imposed economic shutdown, but the recovery from it. We would typically not add jobs this rapidly coming out of a recession. Technically, we're in a recession if you include the down 5% from Q1 and down 35%, 32.9% from Q2, still probably to be mended a couple times, but clearly it's going to be a down 30 to 35% number by the time we're done with it. We would never add jobs this rapidly, but it's the fact that we had the self-imposed government shutdown and then coming out of it. Yes, we're coming out of a recession, but it's a unique recession, most likely the likes of which we'll never see again. So today's jobs report, we added 1.78 million jobs in July. We had very small revisions for May and June, just accumulating to an aggregate plus 17,000 jobs combined. It's astounding how small the revisions were for the BLS report. They were huge for ADP. We'll get to that in a minute. Now, where did those jobs get added? Retail, we added 250,000 jobs. Manufacturing, we added 25,000 jobs. A lot of people were looking for a lot more there. Construction, we added 20,000 jobs, but we had huge ads in construction in both May and June. We've added 600,000 construction jobs over the last 3 months. Leisure and hospitality, we added 600,000 jobs. That's the restaurants reopening, the bars reopening, even though a lot of it's outside. The hotels reopening, calling people back to work. We added 2.1 million jobs in leisure and hospitality in June. We added 600,000 jobs in leisure and hospitality in July. A lot of those aren't necessarily the highest paying jobs. Certainly in restaurants and bars, the official fixed wage is very low because a lot of the money comes through on tips. But that's the breakdown a little bit. The unemployment rate reduced from 11.1 to 10.2. It was only 6 weeks ago that Larry Kudlow, the one of Trump's head economic advisors, was saying that we hope to get the unemployment rate into single digits by the end of the year. This was the July report, 10.2%. Okay, now I think it's important. So we added 4.8 million jobs in June. We added almost 1.8 million jobs in July. So it's not as many as we added, but given that expectations were tapped down quite a bit, this is going to be talked about as a positive report. Now, ADP reported on Wednesday, and they reported a gain. You got to bear with me. They reported a gain of 167,000 jobs in July. Okay. The consensus was that they were going to add 1.5 million jobs. So basically, they were almost like, in today's world, 167 would be a decent number for a month. But because the consensus was for plus 1.5 million, a lot of people were like, oh my God, we're going to have a bad weekly claims number tomorrow. This July jobs report is not going to be that good. It might be flat. It might be up just a tiny bit. It might be negative. But let's take a look at what else ADP said, because it's very interesting. And this is what you get on the Anderson report that you're not going to get from a very large amount of reporters on economics that don't really understand the mechanics of how a lot of these reports are put together. They're just reporting the numbers, talking about the revisions, talking about what the expectations were, and then talking about, why the market might be like up or down because of it a little bit, and what the key talking points or bullet points are from the key, economic advisors in the administration or other highly touted economists that always comment on key economic data. But we're going to explain to you what else ADP said that was so significant, and that ADP tabulates their data a little bit differently than the Bureau of Labor Statistics. The BLS has a survey week every month. It's the second full week of the month. So and they poll about 60,000 households, and then they have some raw data also. So next week will be the survey week for the BLS for the month of August. Okay. their survey week was the month of July, the first full week, the week after the 4th of July. It went from like July 7th to July 14th. ADP goes by payrolls. Okay. So there's people that get paid every week. There's people that get paid, most people get paid twice a week, twice a month, or every other week. But then there's some people that get paid at maybe July 1st, and that will be for the prior 2 weeks leading up to July 1st. And then there's some people that'll get paid like July 14th, but that'll be in a 2 week lag, and it'll be for the last 2 weeks of June. Okay, so what ADP did was we added 167,000 jobs in July. The consensus was to add 1.5 million. They revised their June number from plus 4.3 million jobs to, I'm sorry, from plus 2.37 million jobs in June. They revised that up by almost 2 million. So what ADP was saying is that after we took a closer look at everything, we added 4.3 million private sector jobs in June, not the 2.37 million that we had previously reported. At the time, even the addition of 2.37 million was a huge upside surprise. So, what's very interesting is that ADP coming out and saying, look, we added 4.3 million private sector jobs in June. When we had our June jobs report from BLS a month ago, we added 4.8 million jobs. And I think close to 300,000 of those jobs were government jobs. Could be federal, could be state and local. Probably most of them were federal. So there's something going on with ADP's tabulation where they're not getting all of the data in by the time they report the number. Okay, so it's August 7th right now. So some people might get paid August 14th, but that pay period might actually be the last couple of weeks of July. I think that's throwing off some of ADP's data right now. We'll have to see next month if they revise this July number of plus 176,000. Usually, revisions are a leading indicator of what we're going to get going forward. In other words, when we have upside revisions to jobs numbers or upside revisions to retail sales or upside revisions to manufacturing data, that means we're trending higher. Because a lot of the initial reports are surveys, the raw data comes in, the numbers get adjusted. If we're getting downside revisions to jobs numbers, to retail sales, to manufacturing data, that means the economy's slowing down quite a bit and we're declining. Because when the raw data comes in, it's a little bit, it's less than what the surveys had originally projected. Okay, so that's just my wrap on ADP. Now, let's talk about the weekly claims number, because the weekly claims number came out on Thursday, the day after the ADP report, and clearly the last two weekly claims numbers were, those are first time filers, and then you also get continuing claims. So the last 2 weeks, the weekly claims numbers had gone initially from about 1.3 million to up to 1.4 2 weeks ago. And then last week, it stayed at 1.4. And the continuing claims number, which had been dropping from 20 million down to 8, 19, 18, 17, We had expected it a week ago to drop down to 16 million continuing claims. That number, it didn't the prior week. It stayed at 17. That number this week dropped down to just above 16 million continuing claims. Okay. So this week, the first time job filers dropped down to just over 1.2 million. That's a new low for this whole hideous stretch of um, unemployment claims that we've seen. And it will be obviously very interesting next week to see if that claims number can get. So we had a drop of 200,000 from 1.4 to 1.2 for the week on first time filers. It'll be interesting to see if that number can drop even further next week. Okay. So um, then we came in today. Of course, um, we got the number. We went over most of it. A couple of other details. Average hourly earnings, something people always look at. It's just a barometer of income. Was up 0.2%. That's a positive, especially given the fact that a third of the job gains this month were in leisure and hospitality, being a little bit more lower paying jobs than what you would typically get in large portions of the service sector. Um, but average hourly earnings still increased a little bit. The labor participation rate, uh, I think, ticked up a tenth of a percent. So that's a mild positive. And there's one other key piece of data in this week's employment report that very few people talked about today, and you won't hear from a lot of places. And that is temporary workers increased by 145,000. So we had 145,000 new temporary workers added to job roles during the month of July. Now, the reason that that's significant is that there are two key components of the monthly jobs reports that are very good leading indicators for companies adding full time workers. That's overtime and part time workers. If employers are paying a lot more overtime and and hiring more part time workers, if that trend continues, they will eventually add full time workers. Okay. So um, that's potentially a positive indicator going forward. And we will just see if we get follow through on that. Um, just a couple of other random pieces of data with we've added 9.2 million jobs with all the job ads we've had since the trough in April. That includes 4.8 million in June, 1.8 million in July, and whatever the number was, you can plug in the number from May. I don't have it written down to equal 9.25 million. That's about a little over 40% of all the jobs lost. Now, it's still a heavy lift, but I will say that um, one very good piece of news that we had today was that uh, Governor Cuomo said, "You know what? You got to bear with me a minute. Somebody is banging on a door, and I'll be right. I'll be right back." All right, like, I'm really sorry about that. They usually don't bang on the doors like that for deliveries, and I just wanted to see if maybe something crazy was going on outside. But where I was there was one very positive piece of news during the afternoon today, and that is that Governor Cuomo, the governor of New York, said that uh, all schools in New York can open in the fall. So you've probably heard, seen, it's been commented on numerous times. A big part of getting people back to work is making sure the schools can open. Because if both parents work uh, and the schools aren't open, then one of them is not going to be able to work. One of them is going to have to stay home. And, it's just a big key part of getting the economy past these thresholds of just being 50% open or whatever number you want to throw out there. We've gotten 40% of our jobs back that we lost with all the job ads we've had the last 3 months. So for Cuomo to say that all the schools can open in the fall, with some caveats, of course, that's going to put tremendous pressure on a lot of these states and or localities that a lot of people have thought have been highly politically motivated in wanting to keep their schools shut because they felt it would uh, inhibit the economy from coming back as rapidly as it should. And there are crazy elements of the Democrat Party that have no qualms at all about hurting the economy if they think it would be potentially bad for Trump in the election in November. So I believe that Cuomo saying all of the schools can open in the fall is a very positive step forward. I think you'll see similar comments out of Connecticut. I think you'll see similar comments from Governor Murphy in New Jersey. And those are three big populated states in the Northeast, obviously. Hopefully, you will see it from other parts of the country also. Uh, but Cuomo has kind of been the leader among the governors in the Northeast. Certainly, this Governor Lamont up in Connecticut, and certainly Murphy in New Jersey. Neither one of those guys really knows what to say or what to do until Cuomo does something, and then they follow his lead. So I would expect to hear very similar comments from them next week about schools opening in the fall. Just remember, if you happen to be in the Southeast or in maybe in Arizona or other parts of the country where school typically opens in August, school in the Northeast typically doesn't open till maybe the week after Labor Day. So when he's saying schools can open in the fall, that basically means on time or maybe with a 1 to 2 week delay. Now, I haven't heard a comment back yet from the any leading school board or teachers associations. They have been pretty militant. Some of them have been very militant about wanting to keep everything shut unless they get concessions on all of their favorite political issues. I don't think they're going to get those. They're certainly not going to get it from Washington, and it'll be very interesting to see how they handle these comments from Governor Cuomo. So, um, look, I'm probably going. I'm most likely going to do a weekly recap of the markets because it was a very interesting week. Even though we were a touch lower today, actually, the S&P was up. The the Dow was up, but then even with the Nasdaq being down, this was a weekly closing high for the Nasdaq Composite. And when people look at longer term charts, a lot of times they look at weekly charts for longer term trends, where you look at daily charts for shorter term trends. I got one other question here. What do you think stocks set? When do you think stocks set to pull back? Some of these prices are stupid. Well, I think we had a little bit of that on Thursday. We had a little bit of that today for almost all of the day. I kind of don't really like the markup in the last 45 minutes of the day. I know that the last hour indicator is typically thought to be a very important, can be an important metric for market momentum. I didn't really like the way it acted today. I wouldn't be surprised to see some softening in at least some of the parts of the market that have had the sharpest, steepest rallies, primarily being uh, information technology parts of NASDAQ, the big stocks, 6 or 8, 12, 15 stocks, that have been driving the internet traffic trade, the Apple, Microsoft, Google, Amazon, Netflix, et cetera, et cetera, et cetera, Facebook. Look, I'm not saying you should sell those stocks. Um, I just think these stocks have had a big move and that you're going to start to see um, big money or what we call big dough investors start to at least subtly reallocate some funds into maybe small cap, maybe financials. Financials acted pretty good today. They're up 2%. Maybe energy. If oil was down a little bit today, it was probably down yesterday. It's very fickle. But uh, there was some crazy data out of the EU this week that retail sales in the eurozone showed a data point back to where it was before the coronavirus pandemic. I got to dig into that number a little bit. Maybe I'll hit on it tomorrow if I can get specifics on it. Um, I saw the headline. It was a Financial Times headline, so there's got to be some legitimacy to it. And John saying, I think Wall Street too worried about tensions with China. Look, well, I mean, the Dow had a great week. I don't have the weekly numbers right now. I think I'm gonna, that's why I've got something that's got to happen tomorrow morning. I don't know how long it's going to go on for, but tomorrow or sometime tomorrow or Sunday morning, I'm going to do a weekly recap. Okay. I know we missed Wednesday, we missed Thursday. I had some things going on that I thought were going to take a day and a half. It took 2.5 days. I really appreciate everybody's support here. And this is obviously this is my YouTube channel, The Anderson Report. I am Tim the Source Anderson. I really appreciate everybody watching and subscribing and having friends subscribe and all the questions that you hit me with on Twitter during the day and in the chat here. And if you're not a subscriber yet, please hit that red subscribe bar on the YouTube site. Hit the little bell next to it. You'll get notifications of when the next broadcast is going to be. It's Tim. It's The Anderson Report on YouTube. It's TJ Anderson 12 on Periscope. And my Twitter handle is TJ Anderson 1. So that's pretty much Wall Street too worried about tensions with China. Well, they weren't worried about it this week. I know they talk a lot about it. If you get certain people on TV, they'll talk about how worrisome it is. But I think that after we went through 2 years of paranoia and talk over trade wars, primarily with China, but also we redid the USMCA, which Pablo just mentioned, into a much, much better trade deal with Mexico and Canada. And we had really, 6 to 8 to 10 periods of a couple of weeks, which then became just a couple of days. It would usually last maybe 2 or 3 days when there'd be big fears in the market over trade wars with China. Oh, this is going to be a disaster. And the market would go down hard. Initially, it started right after Davos in January of 18, late January, first couple days of February of 18. The market got hit hard. Those China trade fears went on for about a month. And then almost every other time we had big trade fears with China, the market would get hit for a shorter period of time. Then it would get hit then it would get hit only for like a couple of days. Then it would get hit just for a day and a half. Then it would get hit just for a day. And I think that to a large extent, that has helped cushion the market's reaction to these tensions now with China, because we became immunized to talk about trade war, Cold War, adversarial relationship with China, et cetera, et cetera, et cetera, et cetera, et cetera. So, look, I know the market was down. Um, didn't finish down, but it was down most of the day today. We had talk about adversarial stuff with China all week long. The market acted great, but that's pretty much all I have for today. I'm gonna do a weekly recap. I'll make sure it goes out on through YouTube and on Twitter well in advance. I appreciate everyone's support. Have a great night, and we will talk to you sometime this weekend.